You've seen the charts. You see the gap. You set your order, and then price slices through it like butter. You're left wondering why the fair value gap everyone raves about just failed you. The truth? Most traders treat FVGs like a destination. Real institutions treat them like a trap. If you're trading every gap you see, you aren't a trader. You're a liquidity provider. Today, I'm showing you the magnet versus mirror framework. We're going to turn your biggest losses into your sharpest entries. It starts with understanding where the big money is actually hiding. Grab your notebook. Let's dive into why your gaps are failing and how to fix it right now. Let's get to work. Most traders see a fair value gap and think support. They place their stops right below it, waiting for the bounce. Wrong. They are looking at a mirror, reflecting their own retail greed and the textbooks they all read. But you're about to see the magnet that's hidden behind the glass. Real institutions don't use these gaps to bounce price. They use them as a vacuum to pull it. It's a magnet. It draws price into deep liquidity pools where the real money, the bank orders, are actually hiding. If you don't know where the magnet is, you aren't the hunter. You are the bait. Context is everything in these markets. See, a magnet without metal is just a useless rock. In the same way, a fair value gap without higher time frame bias is just a trap for retail liquidity. If the 4-hour chart is screaming bearish momentum, that 5-minute gap sitting above the current price isn't a bounce zone for a long trade. No, it's a trapdoor. It's the bait the algorithms use to pull price just high enough so the big banks can fill their massive sell orders at a much better price. When you finally learn to align the magnet with the higher time frame trend, you stop guessing. You stop gambling. You start trading with the house, not against it. Now, let's look at the specific footprints they leave behind on the tape before that violent pull happens. Now that you've identified the higher time frame magnet, we need to filter the noise. Not every gap is created equal. Most traders enter at the first sign of a displacement, but they forget the most important rule: premium versus discount. If you are looking for a bullish expansion, you never buy a fair value gap in the premium of the range. Never. That's like buying retail prices at a designer boutique. You're overpaying for a product that's about to go on sale. We only look for the high probability signature, a displacement that leaves a gap specifically within the discount zone of our local dealing range. When the magnet is below you and price is in the premium, you wait for the draw. Watch how the Fibonacci alignment separates the gamblers from the professionals. If it's not in the lower 50%, it's not a trade. It's bait. Now, let's zoom in on the exact candle that confirms the shift. Most traders fail right here because they set a limit order and simply pray that the level holds. But professional money doesn't trade on hope. Professional money waits for the shift. Once price taps into our discount fair value gap, we don't just click buy. We drop down to the 1-minute time frame to find the internal signature. We are looking for a very specific displacement, a fast, aggressive move that breaks the most recent swing high with conviction. This is the market whispering in your ear. Okay, the big boys are actually here now. Listen to me. If you don't see a clear market structure shift accompanied by a secondary gap, you do not have a trade. You just have a gamble. But when that shift happens and a fresh gap forms, that is your high probability entry. Stop hunting for every minor fluctuation and start hunting for the physical proof that the magnet has finally taken control of the tape. Now, Let's map out the entry, the stop loss, and the target on the candles right now.
Entry at the high of the gap. Stop loss tucked safely below the displacement low. And the target? That higher time frame magnet we've been eyeing since the start. Now that the trap is set, comes the part where most traders self-destruct. The waiting game. Price rarely moves in a straight line. It breathes. It retraces. When you see those small red candles forming against you, your instinct will scream to protect your capital and exit early. That's not protection. That's just fear wearing a suit and tie. If the magnet is still valid and our entry candle hasn't been violated, there is zero reason to flinch. We only move to break even after the first internal high is cleared. Until then, you stay hands off. You gave the market a plan. Now give it the room to work. Trust the draw. Ignore the noise and let the math do the heavy lifting. Watch the price action as we approach the final take profit zone.
Look at that displacement! This isn't luck. This is the algorithm reaching for the liquidity we identified 7 minutes ago. As price approaches our higher time frame magnet, the momentum usually accelerates. This is the run-on stops. Most beginners get greedy here and hope for a moonshot, but we are professionals. We take our first partial profits at the previous swing high. Secure the bag. Pay yourself for the discipline of waiting. A profit on the screen is just a number. A profit in the account is a lifestyle. Now, we let the remainder of the position run into the heart of the magnet. Notice the speed of these candles. The retail traders who were trapped earlier are now being forced to close their positions, fueling our move higher. This is how you trade with the banks. This is how you become the house.
What you just witnessed wasn't a strategy. It was an alignment of market intent. The fair value gap is the fingerprint, but the higher time frame bias is the motive. If you stop chasing every flickering candle and start waiting for the magnet to pull the price into your zone, your entire edge changes.
Trading is the only job in the world where doing nothing pays the highest salary. Most will watch this video and go right back to gambling. But you have the blueprint now. Go back to your charts, find the gaps, locate the magnets, and wait for the shift. The algorithms don't have emotions, and after today, neither should you. I'll see you in the next displacement. Control the risk, or the risk will control you.